Hey, hello everyone. Welcome to this session where we'll be discussing the year of virtual investing. I'm sure everybody has heard this over and over again that we are living in unprecedented times with COVID, the pandemic. It's changed the way people do business. It's changed the way people look at opportunities. And fundamentally, it's changed the way investors are evaluating opportunities. And I've got here with me three very good active investors in the African tech ecosystem with various degrees of experience and strategy and the way they look at the market. And what we want to talk about today is how COVID has impacted their worldview as regards to investing in Africa and what they're doing with that going forward. So I've got with me Hidos Sam from Telecom, and he's going to introduce himself very soon. And I've got Lauren Cochrane from Blue Heaven Ventures, based primarily in East Africa, and also Ashley Lewis, Axion Venture Labs, who will be exploring this topic with me today. So let me start with Ashley. Can you just talk us a little bit about yourself and what Axion Venture Labs do?
Absolutely, with pleasure. So thanks so much for having me. Again, I'm Ashley Lewis. I lead Axion Venture Labs investment work across Africa. And we are a global seed stage fintech for financial inclusion focused fund. And so we've been in the market for 8 years now and have invested in 47 companies around the world, touching 30 different markets. Within Africa, we have investment exposure to Egypt, Nigeria, South Africa, and Kenya. And as I mentioned, we invest only in fintech for financial inclusion, but that allows us to go very deep into that subject matter. So we have investments across multiple themes, including consumer and SME lending, alternative data for credit scoring, platfins as a model, which we're excited about, insurance, and others. And so looking forward to sharing with you today what we've learned through the last 7 or 8 months of living in this COVID state and what it's meant for us in changing our due diligence and investment experience.
Lauren, do you want to tell us about yourself and also what Blue Heaven does as well?
Sure. So Blue Haven is broadly a family office based out of the US, but my team manages a carve out that is 50 million US for seed and Series A companies across the continent. Traditionally, we've focused on financial services, renewable energy, and logistics, and often the overlap between at least two of those. More recently, we've even prior to COVID gotten into health tech, which I can talk about. Some of our companies, most of our companies are based in either Nigeria, Kenya, and we've got one in South Africa as well. And our portfolio includes Twiga, Mcopa. We actually are in Paystack, one of the biggest investors in Paystack, so very excited about that exit. Happy to answer other questions as we go.
That's good, and I'm going to pick you up on Paystack. Actually, I know that's not what we're talking about today, but it should be very bad of me not to mention that, not to actually ask you a question about Paystack, given the recent news about their exits. But you seems to be in different, but the usual suspects of the market, which is Nigeria, South Africa, and Kenya, and that shows your Pan-African outlook. Talking about Pan-African outlook, I think Telecom is one of those investment firm that launched in the last 3 years, and had that brought a lot of zest and energy to the ecosystem. So I'm going to allow Ido to introduce himself and to talk a little bit about Telecom.
Sure, thanks. Hi everyone, Ido. I'm a partner at Telecom. We've been around for just over 20 years as a fund. In the last 10 or so, started looking at Africa with a few exits or deals and then exits from the previous fund in Africa in 2014, 2015. Raised this current Tide Africa fund in 2017. We're managing $71 million, investing all across Sub-Saharan Africa, mostly in and around Kenya and Nigeria, but many of our companies, Twiga, Kobo, Ulesson, and others have now went into other markets as well. It's actually has been the most active year for us from a new investments and follow-on investments perspective, with COVID in the background, and very happy to be here and hopefully share some more later.
Yeah. Before I ask the first question, actually, maybe it's good for me to also talk about myself and Novastar Ventures, the firm that I work with. So I'm originally Nigerian, grew up in Lagos, and then moved to the UK, became an entrepreneur, and exited our business and became an angel investor, and then found my way back into VC world. But Novastar Ventures, we invest across East and West Africa. We manage at the moment we have over $200 million under management across two funds. The first fund is basically investing primarily in East Africa, backing businesses that are solving problems for the low-income mass market. So our thesis is very narrow in this and wide, in the sense that we are backing businesses that are solving problems for the largest segment of the market in Africa, which is the low income. And then the second fund is almost about $120 million, which is basically focus based in East Africa and West Africa as well. And I joined the firm just when they did the first close of the second fund. We've invested in businesses across many sectors, primary education like Bridge International Academy, mobility like Max Okada, or health like M-Pharma, and agri-tech as well. So we are currently very active, and like Ido said, this is a very active year for us, which is ironic. It's a year that everybody was locked down, but it's super active and very busy, and we are still looking for opportunities to invest in, especially through our second fund. Now, talking about being busy and the irony of staying people locked down at home and not being able to travel, and we know if I compare the flight, the itinerary of the four of us in this room here last year compared to this year, there's going to be a huge difference in terms of how much we travel. And sometimes we equate that kind of travel with very busy, because you have to go and meet companies, meet entrepreneurs, have coffee, due diligence. But it seems, like you just said, and again, I'm going to maybe throw that question to you, Lauren, about being busy. What has been this year? How has it been for you in terms of new deals and opportunities that you have to look into? And the irony of you being maybe locked down in a particular place.
That was directed at me.
Yeah, that's for you, Lauren.
Yeah, I mean, I think there definitely have been some ups and downs. I would say early on in March, we kind of only focused on our portfolio. We sort of wanted to figure out who was going to be in trouble, how should we help. We spent more time than was probably useful thinking about the best way to provide bridges during this time. Like, we thought that a lot of our companies would need money, and we had lots of internal debates about how kind of rigid to be on the way we would normally look at deals like this. So like, you know, you don't want to be seen as taking advantage of the situation that a company is in and getting great terms, but at the same time, like, the world seems to have changed. So valuations are different, revenue projections are different, everything else. And I was pleasantly surprised that most of that never got out of the iteration phase. So after probably the first few months, we went from that kind of like emergency pre-triage to thinking through what kind of strategies make sense in this world. And that's obviously different for every company. So spent a lot of time on that. And I would say in the beginning, we just said, like, we can't even process new investments right now because we're too busy worried about what we've got on our plates. And so in like July, I guess, we sort of picked up on new investments. So we actually have closed one investment with a company that we already knew before that hasn't been announced yet. And now I'm actually back in Nairobi, so able to go and see entrepreneurs and do on the ground due diligence, which helps. So we're kind of just getting back into new deal doing. But I would say, it definitely, we were busy for the first like 3 or 4 months, like very fearful of where we were going to end up. But for the most part, things have been much better than I expected back then. So that's given us, I also have a super small team. So it's given us the time and the headspace to start building pipeline again.
Yeah, that's good. Thanks for that. There are some fund, maybe like you and maybe like us as well, that has a lot of people, a lot of companies that we can look after when COVID hit and the reality hit everyone. We have to, like you as well, we're focusing our attention on how do we keep those companies alive. And so that was a lot of energy going into that March, April. And then it just keep you away from looking at new deals. But there are people, maybe, again, this question is for you, Ido, that you might not have. I'm talking about your fund now, your African fund, rather than TLCom generally. You don't have that luxury of not looking at new deals. And I was reading a statistics recently about in the third quarter of this year's VC fund completed for first time in funding round dropped significantly in America. It's $2.1 billion last year compared to this year compared to $3.9 billion last year. So there's a huge drop in people looking at Newton, and I think Lauren mentioned that with regards to them as well. But for you, Ido, that you have capital to deploy, you recently just closed your fund in Africa. What has been your experience so far, and how are you managing that?
So I think that, a little bit similar to Lauren and to yourself, we also took most of March and April to sort of think through our existing portfolio and spend a lot of time with teams on how to best prepare and think through the new implications of what we didn't really know, the future holds. But cash is king in such periods, and make sure that everyone have a very good grip on the cash flows. Plus enough runway to get at least, at this point it was to the end of the year. Now it's, sort of maintaining a 12-month runway with the knowledge that a lot of the later rounds, especially those that depend on international investors, might be postponed because they're not traveling and it's harder for them to take risks without seeing the company physically. On the back of that, in and around, I think, late April, early May, we started going back to our pipeline and actually starting to see, again, many interesting companies that now have realized what are the initial implications of that. And I don't think that we yet interpreted all of the implications of COVID, but at least, what the initial things are, and refocused their business, made sure that their value proposition resides well with this new situation, and that they're really creating value to people who are willing to keep paying and pay more at such times for whatever the offering is. And these became very interesting deals for us. We since entered 3 new deals. We did 2 that closed in the first period of COVID, so earlier in this year, and 3 that will be announced in the next few weeks. That all happened during that period. So for us, it was actually a very interesting time to do due diligence. There were some hurdles in how to manage it. It was definitely different than the years before. The fact that we have people on the ground, part of the team in Nairobi, part of the team in Lagos, was a huge help in that sense. And we definitely found that the fact that there are more international investors taking a step back made a lot of room for very interesting opportunities for people who are in the know, that know the local ecosystem and the meaning of COVID to the local ecosystem better, and made it very attractive for us.
So what I'm hearing is that everybody's open to do business, and so I wouldn't ask the same question to Ashley, but I'm going to throw the question to you in a different way. So it means, we are open for business. We're doing more deals. There, it seems Blue Haven is doing new deals as well, and TLCom is doing the same as well. And I'm expecting that Ashley Action Venture Labs will be doing the same thing. We're open to invest in new businesses, and COVID has not changed things too much. But I want to ask you specifically, Ashley, what has changed in your view or approach to risk and pricing as a result of COVID?
Yeah, great question. So, I mean, I don't want to echo too much what has already been said, but we were still open for business. We took those first 2 months to make sure, like our current house wasn't going to be on fire. And luckily, most of our companies were well capitalized. And we actually went back out to market in May and started with our first fully digital due diligence process. So when I say that, I mean, we had never met the founding team in person. We had, and I think that's very different than saying we're still investing, but we had a chance to meet the founders at some point in the future. Like, this is a big step out on faith to say we can do the pattern matching and we understand the business model, we believe in the market, and we're willing to have like a digital coffee or a digital glass of wine and with founders and try to build those relationships, which you do when you're on the ground. And so I'm actually really excited to say that we've done that with 3 different deals in 3 different markets, not just in Africa, but globally. And I was really glad, because you never know how your organization is going to respond to a situation like this. And I was really glad that Venture Lab could say, we're willing to keep on working and being in the market and being relevant, because we are the seed stage investor in this pipeline, and oftentimes we are the ones taking the most risk. And so I think it was a great signal to the market on the fact that these businesses still need capital and that we're willing to do it. Now, to your specific question on what it means for pricing and risk, there's obviously a tremendous amount of embedded risk in that approach, right? And so I probably won't know for 2 or 3 years whether we made a tremendous mistake or a really great investment decision digitally. So, TBD on that one. But I think what we did that helped us better assess the risk and pricing was we leaned on a few things. One, we leaned on incorporating our full team into the investment process. So traditionally, it's been like investment leads from each region involved. But what we did is we brought in our portfolio engagement team to help us better assess risk in the tech element of the business, as well as some of the operational risk that we could expect to see in the business. And that means that we're able to draw on the learnings from our global portfolio to potentially de-risk that investment. In all of the situations, we were not the lead investor, so we did sit and work very closely with the lead investors to make sure that we were aligned on pricing. And to be quite honest, there were some contentious conversations, and it wasn't always simple and straightforward, right? And so we've seen situations in some of our deals where lead investors changed, throughout the process because we couldn't align, not we, meaning but more so the founder and leads on what was fair. And we ultimately settled by saying, we understand these models. This is in line with what we're seeing in each country. We're not trying to take advantage of founders. We actually want to be very founder friendly, and we believe that founders should be supported in that realm, and we didn't want to take too much of a discount, so that was kind of our process. We're actually, and maybe I'll talk about this more later, but we documented the changes that we made to our due diligence process, both for investors to learn from, but also for entrepreneurs. We have a mini guide that we put together for entrepreneurs that are going through this process and working with investors during this time on how they should approach some of these conversations or processes, and then sharing more widely with the community of investors what we did as well that has been successful to date.
Ashley, that's a good segue into the other question I wanted to ask about the process of investing. So it seems all of us here are on the same page around we're investing, we're adapting to the changes, we understand that a few things have changed and we need to react to that. But the process of investing, as we all know, all of us might have a different way of doing it. The critical part of that is not just seeing the business and where they are and how they're doing, it's actually spending time with the founder and looking into their eyes and drinking coffee or wine with them and understanding what makes them tick and spending those days with them, maybe in their office or with their team and the process itself. So this is an open question to any of you here about what challenge have you seen in the due diligence process in this virtual world that we're in right now, and how has that affected the outcome? In some cases, for the businesses that you either want to invest in that you couldn't, or the ones that you end up investing in and you are doing it with shaky hands, like Ashley mentioned. Anyone can go.
Sure. So I think for us, it's a combination of a couple of things. One, we were able to have at least one of us meet part of the team at some point in the process, which is very far from ideal, but is more than nothing. We did spend a lot of time on various virtual platforms, much more than usual. And we made sure that we speak to not just the founder, but other parts of the team separately and as a team. I think the greatest disadvantage in my view is the ability to see a team together in a room and then even just pass through the office and see the rest of the wide, because you don't interview every person in the company when you invest, usually the top management, but just to see how things feel over a period of time rather than just over 3 minutes. That is very material, and we definitely miss that sentiment of how things are, and I don't have a good way to compensate for that at this point in time. I think for us it was just spending much more time in a much more structured way on the process. Some of the conversations, especially with around the company, so with partners, with clients, with other ecosystem players, for some companies were a little bit more challenging to do. Some cannot be done virtually. You cannot do a in the field type of due diligence over Zoom. It doesn't work. So in that case, typically only one of us would do the work and report to the others to the extent possible. Sometimes there was lockdown, so it wasn't. I don't think we're yet there at completely cracking it. And I think that there are some deals who fell through and will fall through for the inability to do this type of work when it's more material. In some deals, it's less material, especially in the earlier stages, it's typically a little bit less material. But we will keep learning and educating ourselves and hopefully improving over time.
Sure. Ashley or Lauren, is there anything that changed in your process or any learning that you can point out to us as a result of COVID?
Yeah, I mean, I would say in our sort of post-investment process and the way we think about things, one thing that I think evolved, and it sounds like a little bit for all of us, in the beginning, our stance was very much like keep the team together, make sure you've got cash runway, like make cuts where you can, but we'd prefer you not let people go if possible. A, just because of the situation, and B, because we think this is only going to last a month or two. When you think back to how we were viewing this in March, and then I'd say probably in April or May, it's hard to pinpoint the time exactly, but we sort of said, okay, this isn't a 30-day thing. This is much longer, and we need to make harder decisions about whether it's business model, people, and different types of costs. And so I would say we then went back and there were much deeper cuts than I would have expected even 2 or 3 weeks before. And I think what it has shown me is that we should be thinking about those cuts, or it shouldn't be cuts. We should be thinking about running businesses that lean in all times, you should really think hard before you hire anyone. And obviously that gets harder as the company gets bigger and everything else. But, we have a lot of conversations with people that are like, well, we've got these 5 or 10 people that we're not really sure where they fit, but we're going to sort it out. And not to be too harsh, but most of our startups are not yet profitable. And now I think we'll have a much harsher view on, and it's not just people, it's the kind of technology, it's developers, it's the just general unit economic calculations and how quickly you make pivots to things. I think we will kind of take a stricter view more quickly in the future than we probably did in the past, because we now know that businesses can survive on less, and within reason. I'm not saying you can't spend any money and you can't hire anybody, but I have a slightly different view on what a lean team is, I think now.
I would just maybe do a follow on you, Lauren, on that. Has this changed any? I know you invest a lot in fintech as well, but has COVID and the impact of it in Africa specifically change your view on which sector or which model, to some extent, you're leaning more towards, or which ones are you actually saying this might be a problem in the next 2 or 3 years?
Yeah, a couple of things on that. I think first, we had actually already made a health tech investment actually with Ashley in a business called Field Intelligence that does last mile distribution and supply chain finance specifically for pharmacies. Is headquartered in Nigeria and also operates in Kenya. And that just turned out to be, I think we closed that like February, March, like right before the world ended.
Right at the right time. You closed at the right time.
At the right time. And everyone was like, whoa, you guys, that was great timing. And it's like, well, that I can't take credit for that being any kind of foresight. But the other investment that we've done since then is in health. And I think there is, I saw on the earlier panel on logistics, people talking about how this has forced people to adopt remote solutions to health and trust technology more. And I think in health in particular, that's certainly accelerated things similar to logistics. And the other thing is like those that know me won't be surprised, but like we've always really focused on unit economics and how you build a sustainable business model on not raising tens and 20s and 30s and 40s of millions of dollars when you're still losing money. And I won't say like, I told you so about that, because this is a very unique time that no one foresaw. But I do think that our businesses that had more of a focus on unit economics have been more resilient and have not had to go back to the till for more money from investors on terms that they might not like. So that I think has given me more conviction in that. But then I would say on the health side, we've learned a lot. And I think consumer preferences and behavior have changed as well.
Yeah, Ido, has this changed any of your sector thesis?
I think it strengthened some of the thinking around the fact that we are going, in Africa included, into probably a tougher economic times where spending patterns will not go up but will go down, and people that were smart about their spend before will become even more specific and smart about their spend in the near future. And that is the case for consumers as well. It is for SMEs and corporates. We have seen on the enterprise software side and marketing and so on and so forth, lots of cuts on the client side for some of our companies that at times impacted our own portfolio. And hence, I think this definitely sharpens the fact that we should be laser focused on things that are super material for whoever we sell, let it be again consumer or businesses, and the value proposition should be very, very accurate and very clear on either the saving or the very actual and quantifiable benefits that it gives customers. So all the nice to haves are the type of models that I don't think ever really existed in Africa, but if we needed to crystallize something, that definitely helped. And other than that, this is really we're now going a little bit into health as well, education, agri, so things that to us are fundamental going forward and are large sector in which people will keep consuming different types of services and products. This is where we see ourselves focusing.
Actually, I want to turn the question. I want to move to another question. This for you, actually, based on what you said the other time. You guys you're drawing out lessons from the COVID, how it's affecting your processes and your strategy. But you also said something which was in passing, but I want to actually shine more light on that. Is you started drawing out some lessons for entrepreneurs, and I'm very cautious that a lot of people will be listening to this are not investors like us. So a lot of them are entrepreneurs who are looking at getting money from investors who are actively raising money now. And as I said at the beginning, that stat that I read out is getting harder and harder for entrepreneurs, first time entrepreneurs to raise money now, or first-time people who are raising money for the first time. So can you just draw us maybe 1 or 2 or 3 lessons that they should take away from here if they want to raise money this year or within the next 6 months?
Yeah, absolutely. So essentially where we're at, and I'll parallel this with our investment process if there's anybody on the line that's interested in raising capital from Venture Lab, plus like what general entrepreneurs should do. The first thing that we did when we actually kind of had 4 major changes in our investment process. And one was getting a deeper understanding of the context in which these companies are operating. So understanding that obviously we all do the macroeconomic kind of analysis, but going a little bit deeper and saying which sectors are going to be unnecessarily impacted by COVID, or not just COVID, but imagine the economic situation that's happening in South Africa or in Nigeria today. There are different factors that need to be taken into consideration. And that led us to reconsidering our investment thesis. So we looked at business models that might have an overexposure to things like lockdowns, moratoriums. And if entrepreneurs can think through ways to avoid or mitigate those risks and articulate that to investors, it's extremely helpful because it's top of mind to us, right? And so I think that there's this overall preparing for what investors are going to ask, but also trying to find the resiliency in your own business model as well. Then there's this overall element of, unfortunately, the due diligence process right now is not super efficient and efficient, right? So historically, we would go on the ground and we'd be there with you for 3 days, and we just kind of do this download of the business. And now it seems to be this like perpetual loop of Zoom call after Zoom call after Zoom call, which is frustrating for both sides, right? Nobody wants to add more of that to their schedule. So if the entrepreneur can be extremely organized in their deal room, right? And also pointing, sometimes, I'll be honest, sometimes investors are a little lazy. They're not even taking the time to read through what entrepreneurs have gone above and beyond to prepare, but pointing them to those resources so that every call is actually productive and efficient for both sides. I think that's the second one. And then the third is around collaboration. And so I know this might sound strange. Sometimes entrepreneurs get really uncomfortable about introducing investors who might be interested in a deal because they think that there might be some, collusion between investors, but sometimes there is efficiency in getting a syndicate together to go through the diligence process with you. It kind of kills multiple birds with one stone. I know, like, for example, Lauren and I have been able to leverage each other's, the information that we've gathered for a due diligence, and it just really accelerates the process. So don't be afraid to have more collaboration. I've gone through one diligence experience where everything was done in a silo with literally 20 different investors, and it was a disaster for the entrepreneur, but also it was very inefficient for the investors that were at the table at the time. The last thing, the fourth thing that I'll mention is preparing yourself for an extended and prolonged runway, right? And so back in the day, we were looking for runways of like 12 months. That was pretty standard for a seed round. Now, for us specifically, we're asking entrepreneurs to get used to, at least right now, temporarily, raising funds for at least 18 months. Hopefully by then there will be a bit of light at the end of the tunnel, not only for COVID, but also extended kind of macroeconomic downturns in certain countries. And so just preparing yourself mentally, and also preparing your growth expectations and also your round size for that extended runway need, I think, is paramount. I will not stress, I will stress that the companies in our portfolio that were really able to weather the storm were the ones that were very well capitalized going into COVID. And so I think just in general, being more cautious than less is important during this time.
Thanks, Ashley. There's something that you mentioned there, which is around what has changed in the dynamics of investors working together, collaborating. So we do co-invest, and I know, and we co-invested with you, or we look at co-invested with Axion as well on a few deals. But what has changed now is people sharing data and sharing information early on, so that you're not duplicating this virtual due diligence that we're seeing today. So I want to throw that question to Lauren and Ido. I just want to get your perspective on what you guys have seen that has maybe changed from in COVID world now, that has changed in terms of the way you work with investors and collaborating with them and investing in this unusual time that we find ourselves. You both nodded to each other. Okay, I'm going to let Lauren, you go first.
Okay, I feel like I talked last, but no, I feel like we've covered a lot of it. I mean, the other thing that it has given us a chance to focus on is sort of the longer term plans for a lot of these companies, whether that's the exit plans with some companies that we've been in for a few years. I cannot take credit for the Paystack exit. That was all of the management team. But with some of our other companies, we just exited. We have an investment in Cross Boundaries Solar and Industrial Financing, Solar Commercial Industrial Financing platform, and we just exited that one as well. And that took some planning and time. And there's a few businesses that we've been in for multiple years that we're now starting to say, like, okay, we need to start thinking about what an acquisition, or if there's a larger deal size or something like that. So this has given us a little bit of space to think through those kinds of things as well, that are particularly, I mean, you mentioned in the beginning, when you're like running around between all these different markets and traveling, you kind of can confuse that for busyness. And I feel like there's been more headspace for actual thinking in a way that I probably underestimated that we don't do enough of before COVID.
Yeah, I've got a few minutes, but Ido, you wanna
I think
go
for
into
us,
that question about what has changed? Yeah.
To your point about working with other investors, we tend to lead the rounds we participate in, at least the first 1 or 2 rounds we're in. And I think a big learning for us in this time is really focus on the right set of co-investors in companies, and making sure that there is enough robustness around the table, and to Ashley's point, for a longer period of time than before. My assumption is that we're looking at a much longer than 18-month global economic crisis. This is going to take a few long and unhappy years, in which it is hard to predict how some of the global money will act. Some could come to Africa looking for diversification, new opportunities, and some may not in the short term, in the next 12 months with flight issues and travel issues and so forth. I think we will see less international money, especially less international money leading deals in the region, and that makes us more keen to be in with the right set of local, and maybe not just local, investors that can grow with the company and support it for a longer time without the need to depend on a fully new investor in the next round that is outside of the continent.
Yeah, thanks a lot for that. We have just in the round. We're running off now. I've been told that we'll be going to the next session, but I want to give you guys 30 seconds each to answer a very, very difficult question. So you have to be very witty about answering that, and you're not allowed to dodge it. How do you think COVID will affect your next raise, your next fund? Looking at the potential performance of the current businesses. Now, Lauren, I know you've got a very good exit last week, so that could be a makeup. But then, what do you think? How will COVID affect investment and you being able to raise the next fund if you are going to that? So I'll start with Ashley.
Sure. So for us, I mean, last year we closed our first sidecar vehicle. So up until then, we were investing off of Axion's balance sheet, and then we raised from a number of LPs, very familiar names to everyone here. And the great thing is we've deployed a lot of that capital. So soon we're going to be moving into that next phase of growth as well. And it's a great question about what is the storyline there. I think for us, we are a global fund, right? So we have investment exposure to the US, Latin America, Africa, and Asia. It's pretty balanced across those regions. But we will, I think, start to see kind of a shift, to Ido's point, like there will be maybe a shift in capital to different markets. And so I think, well, I'm very optimistic. I think that it will be a successful fundraise and all of that. And I think that it will also make us start to question the overall investment thesis, because right now we've been exclusively seed with the ability to follow on in a Series A. I guess there's questions around, look, do we stay with that? Do we extend up to Series A? Is there something else that we could do to better be that trusted investment organization in the markets that we serve? And so I think it's all about showing the success of our portfolio. We've exited companies out of the 47 that we've invested in, and many of those are still, the ones that we haven't are still operating. So I'm really excited to see how these next maybe 18 months go. Maybe I'll have a situation like what Lauren has had, the success there. I'm keeping my fingers crossed, you never know. Yeah. But I'm expecting success. And we have LPs that are in it for the long term. They understand the markets that we invest in. I think that's the most important kind of that investor alignment.
That's good. That's good. I think that long term is very key as well. Ido, 30 seconds. What do you say? How would this affect your next fundraise?
I think that, at the end of the day, we depend first and foremost on the entrepreneurs we back and the founders and teams we back. I would like to believe that we have made some very good choices in this fund. Some are already in portfolio and announced, and some are being made and some will be made. And my true hope is that with a fairly strong, in my view, portfolio in the continent and the ability to be very present and very active, we will be back with a larger fund quicker than some might think.
Lauren, you got a last word for 10 seconds. You can actually say Paystack.
We, as a family office, don't have to raise money. I'm very lucky in that respect. But yeah, I think the word that will characterize our work going forward is sort of resilience and looking for entrepreneurs and business models that we feel can weather lots of different types of storms like we've had in 2020.
It's great. Thanks a lot. Thanks a lot, everyone. I'm also optimistic about the future and the next fundraise for Novastar. We're optimistic about it, and we're looking forward to backing more entrepreneurs, and we're expecting greater things to happen as the year goes on. Thanks a lot, guys, for indulging my questions, and it's been great to catch up with you guys again. Not virtually this time, but face-to-face over coffee at different cities that you might be in. Well, thanks for this time. Great.
Thank you.
Over to you, Andrew.
Thanks.